The first thing we have to realize is there's a whole new profile of the typical gold investor. It's more of the momentum investor now. So we really have to pay very close attention to the hedge funds, the momentum investors who are relying on continued momentum to continue to compound their returns. That has caused me a great deal of concern, because now with gold declining 10% 4 times since 2010, it's become an entirely different asset. It's become a lot more volatile, almost like the stock market. In a lot of ways, it's very tightly correlated.
So is it no longer a safe haven?
I consider it the safe haven that sometimes doesn't act like a safe haven.
So it is a safe haven, but it doesn't act like one.
Right.
Well, how does that make it a good investment?
It's all in your perspective in terms of your time horizon. If you look at gold as a momentum play, it is going to be very difficult to continue to invest in it and hold it, because it's got that momentum factor now. If you look at the long-term fundamentals, especially with what we have going on now, liquidity, I mean, the Federal Reserve is committed to just an avalanche of liquidity for a very long time.
Right, but when you look at, say, Ben Bernanke's testimony earlier this week, on Tuesday when he testified to the Senate, had a big rally in gold. Then Wednesday when he testified to the House, gold sold off $18. So what do you make of that transition? Well,
right now it's primarily focused on the short term. The momentum, if the momentum is there, you tend to get more compounding momentum, and the short-term traders, people are buying in the morning, selling in the afternoon. That is going to continue for a while, because gold has shown that it has a relatively predictable momentum trading pattern, and as long as people are focused on that, they're going to disregard all the other fundamentals that support owning gold long-term.
And is that why you would then be a buyer on a dip? Because of those longer-term fundamentals?
Yes, because, you know, when we get all these disclosures of hedge funds selling, price targets declining, what generally happens is a lot of people who don't recognize all the fundamentals that support gold, they sell, and you get these irrational sell-offs like we had. There was justification. When I sold my gold, a good percentage of my gold in October, there was justification to sell because of the amount of hedge funds and momentum investors that had moved the stock to that current level. Now those same investors are driving the momentum negative, and it's that reverse momentum that you have to take advantage of.
It must be tricky, however, for an investor who looks at ETF investors. You know, George Soros held shares of the GLD, and those investors tend to be stickier, but it seems like you're labeling them as momentum traders. Are they all shaken out?
In some cases. I mean, obviously people like Paulson and Soros, they are very, very instrumental in the perception as to how the hedge funds are going to treat gold. And I think, and you have a lot of copycats, a lot of hedge funds that followed our lead, because George Soros has timed certain sales that were interim tops. So people look at that and say that they're going to basically copy that.
So with gold really struggling to retake the $1,600 level here, what is your price target on the upside and the downside? What's the range that you're looking at?
I think we're going to continue to go between this 1550 range and 1800, 1850 range. You know, I think it's wishful thinking to consider the 2000 target with the amount of momentum investors that are there, and this significant focus on central bank activity.
Right.
That's really a more realistic.
And my last question, when we do see a washout in gold, it can be very painful and volatile to the downside. Do you expect the same kind of upside violence if we do see any sort of rebuilding of the ETFs?
I do. I mean, I think the same momentum that brings gold prices down are going to bring gold prices up. There's this dynamic of...
And just as violently?
Yeah, just as violently, because the momentum behind gold in interim periods of time is substantial, and there's a lot of traders who want to take advantage of that.